Walter, go ahead and take us through why it's important for a person to understand both cash basis accounting and accrual basis accounting.
Well, think of the basis of accounting as the way accountants keep score of money. And there's really two ways that they keep score. In the cash basis accounting, all we care about is when money leaves or enters the bank account. So when a dollar enters, it's income. When a dollar leaves, it's an expense. In the accrual, we're much more concerned about when we earn money and when we incur an expense. And accrual in accounting is often used when we deliver services today and get paid for them down the road. So in our business, this happens all the time. We deliver services this week and we may not get paid for 30 days down the road. And that allows our income statement to match when we earn the revenue with when expenses are against that. So it might be very common that we incur expenses in a given month and we pay for them in that month, but the revenue associated with those expenses doesn't hit the bank until next month.
So it sounds like each of those methods has a specific distinct advantage. What method matters in what situation?
Well, the cash basis matters for all of us because Uncle Sam keeps track of things by cash.
Hmm.
For almost all small businesses, we report our tax returns on the cash basis, and every 1040 is reported on the cash basis. So, cash basis is crucial for government reporting. It's also probably most useful for the kinds of businesses that get money at the time that they deliver the services. So, for instance, a small retail store might be more meaningful to see cash income than accrual. Accrual is, like we said, is going to be very useful for a business that delivers services today, delivers ships a product today, but gets paid down the road when there's this gap in time between when we earn the revenue and when we receive the revenue. And accountants use the term recognize revenue and receive revenue.
And so, when would it be important to use each method based on what's going on in the business?
First off, the business model. What type of business? You're the lemonade stand at the corner doesn't need to use accrual. Matching revenue with expenses is pretty easy. And when the kid sells the glass of lemonade, revenue is immediately received as well as recognized. For businesses that have these time gaps between when they are earning money and when they're delivering services and when they're actually getting paid for those, accrual is much more important. You see, accountants are obsessed with what they call the matching principle. So making sure that revenue and expenses line up in a given period, whether it's a week, a day, a year, a month, a quarter. We accountants are fastidiously concerned that the bottom line number has revenue and expenses matching up in the same period. For some business models, that cash accomplishes that sufficiently. But for many business models, we need to look at accrual.
So, what would be the benefits of a business owner understanding both models?
Well, the accrual method often answers one of the questions you and I get asked a lot, which is how come there's so much profit showing on my income statement and I don't have any money in the bank? And that has to do with an accrual profit, which is all about billing our clients and recording the bills to our vendors and has nothing to do about when we receive that cash in the bank. So a business could be, and we have had clients who are very profitable on paper, but they don't have much money in the bank, and that's not a profitability issue. That's a cash flow issue. So that could be they have problems in collecting their receivables or other issues that are related to poor cash flow.
Yeah, so it sounds like there could be some common pitfalls for relying on just one basis or the other. Can you go over what those pitfalls are?
Well, what we find with a lot of our clients is they're very familiar with the cash basis. It's because it's so often what they prepare for their tax returns. It's what their CPA has gotten them accustomed to. And I think the biggest pitfall is the arbitrary nature of when money comes in and out of the bank account. And a pitfall of that is you don't really know whether your business model is profitable. So you and I often say that while cash doesn't lie, and that is what we're going to report to Uncle Sam, it doesn't necessarily tell us whether the business model is profitable. We could be showing a loss on a cash basis because a very large client simply hasn't paid us. It hasn't appeared on our income statement. We could be showing a false profit because that very large client that we worked on 2 months ago finally paid us, and that money is showing up in the current period. So the accrual information is going to, again, there's that key word, match up revenue and expenses in the same period. And that's what accountants, one of the things accountants are obsessed about.
Right. So if you're a business owner and are curious about learning more, Walter, what would you recommend?
Understanding Accounting Vocabulary 101. Schedule a call with us. We love to teach this stuff. And go take a look at your own QuickBooks. Many business owners are even unaware of what method of accounting they're looking at in their statements. And every QuickBooks report, you'll see at the top, there's a button that'll say whether it's you're looking at a cash report or an accrual report. And if that's not a button you've ever even noticed before, see what happens to the number at the bottom of the page.